Hello friends, welcome. Friend, yesterday Controller Generals of Account came out with their March statement for the Government of India accounts, which gives us a very good visibility as to what kind of performance the Government of India had as regards their accounts are concerned. So what I thought is that I am going to use this opportunity in this video to take you through the trends, what kind of trends that we have seen as far as the Government of India accounts are concerned in various line items, and what kind of risk and opportunity that exist in the future. So let's dive in straight into the video. So there I have basically structured this video into various dashboards, and I have blown this dashboard so that this dashboard becomes a little bit more visible. This is an active dashboard, and you will understand as I take you through, because I'm going to use my pen and I'm going to point to the line items which I want you to focus on. So let's look at this dashboard. This is the summary dashboard. This actually has all the line items, which is the summary items. What are the summary items? The revenue receipt. And the revenue receipt basically consists of two items. One is the non-tax revenue. Another is the non-debt capital receipt. Okay. And the non-debt capital receipt consists of two items. One is the recovery of loans, and other. These things together, you will find the total revenue receipt, right? Which is revenue tax receipt, non-tax receipt, and non-debt capital receipt. So these three, if you add, then you are going to get this. And then we have the expenditure items below here. After the expenditure items, we have the fiscal deficit. So let's talk about these line items and see how the trends of the Government of India has been since for this financial year. So if you look at it, it starts from April 2023. Now the revenue received, this is a cumulative sum, right? And for why I have done cumulative sum, because it gives a very good visibility, and I'm going to basically choose a different time scale, and you will be able to see that how our performance has been in the past. Now the total received is 23.27 lakh crores, and this is a very important number. You should remember this number, because I'm going to break this down into further detail, right? Then we have the non-tax revenue of 4.02 lakh crores, and this is also going to be very important, because the non-tax revenue is a very important component of Government of India, because it consists of two different type of receipts. One is the economic net receipt, which is basically coming from auctions, license fee revenue, etc. And then there is one more item which is very important, which is dividend and profit, which is coming from the RBI's dividend to the government, which is a very significant part. So this number is going to be very, very crucial as you go forward in time. And then the total revenue receipt is 27.89 lakh crores. So this number compared with the last year number, which was 24.56 lakh crores, this year the total revenue receipt is 27.89 lakh crores. Now expenditure has been 34.94 lakh crores. Now if you look at this expenditure, you will find very, very interesting. Why it is interesting? Because though the revenue received has increased from 24.56 lakh crores, if you see, to a significant number of 27.89 lakh crores. So there is a substantial increase. However, the revenue expenditure, which was 34.53 lakh crores in the last financial year, you will find that this financial year the revenue expenditure has marginally increased. It's only 34.94 lakh crores, which basically tells us the government has been, doing some kind of fiscal prudence in order to make their expenditure low. And we will go into the detailed line item when I take you through the government expenditure, both kind of revenue and capital expenditure. You will see what kind of saving the Government of India has done on this part in order to make this look low. Then we have the interest payment, and this is a matter of concern, and I'm going to show you why this is a matter of concern. The last year it was 9.28 lakh crores, and this year it is 10.64 lakh crores. You see this number has increased. And then the one positive thing, the capital expenditure, the last year was 7.36 lakh crores. Now this year it is 9.449 lakh crores. And the total expenditure last year was 41.89 lakh crores, and this year it is 44.43 lakh crores. So you see that. So what the government of India has done from a financial prudence point of view, they have kept the revenue expenditure low, because they have not increased revenue expenditure substantially. They have increased their capital expenditure significantly from 7.36 lakh crores to 9.49 lakh crores, and therefore their total expenditure has increased from 41.89 lakh crores to 44.43 lakh crores. This is important, and that's why what has happened is that because our revenue, income has increased, because the total income, income, if you see here, the income was, this is the total income, the revenue received plus capital received. This is the total income, which is 27.89 lakh crores. So if you add this to this, the fiscal deficit, which is 16.554 lakh crores, then you will get this number, 44.340 lakh crores. So what is the gist of this story? The story is that because we are making capital expenditure, which is huge, therefore our fiscal deficit, the fiscal deficit number, though it is lower than what we have seen in the last fiscal year, still it is very, very high, right? So this is a very, very important point, because the fiscal deficit is going to be a very crucial component of our overall financial prudence, and the world is going to be watching us on this, because our rating and everything is dependent on how much debt that we take and how much, because this fiscal deficit cannot be funded without taking any debt. So you have to take debt in order to fund this fiscal deficit. So that is where the world is closely watching us. Now what I'm going to do is I'm going to take you through, I'm going to zoom out. When I zoom out, you will be able to see quarter by quarter. So this 13th quarter will give us a very good picture as to what happened past financial year. So you'll notice here, in the past financial year, the revenue received numbers have been increased steadily, because it is all Q4. You see that Q4 numbers have been pointed out here because it's a cumulative number. So from 14.2 lakh crores, we are now at 23.27 lakh crores. That is from FY21 Q4. In FY24 Q4, our revenue received has increased significantly. That is from 14.24 lakh crores to 23.27 lakh crores, right? And then if you look at the total received has been increased from 16.9 lakh crores to 27.89 lakh crores. And expenditure, the total revenue expenditure, again, this is a very important point, because the government of India has been very conservative about revenue expenditure. So you will see that though the total received has increased from 16.9 lakh crores to 27.89 lakh crores, because this is the last quarter of FY21 Q4, this is the last quarter of FY22 Q4, from 16 to 22, then 22 to 24, and then 24 to 27. Our revenue expenditure, if you see, 30.86 to 32.01 to 34.53, and then 34.94. So the government has been very steady and conservative as far as revenue expenditure is concerned, right? And the capital expenditure is going up. See, 4.25 to 5.93, from 7.36, and then 9.49, right? And the total expenditure has from 31.11 to 37.94, and then 44.93. So therefore, if you look at the fiscal deficit, because there is lower revenue receipt here, the fiscal deficit was pretty high in FY21, which was 18.21 lakh crores, and then the government was steadily reducing the fiscal deficit. Now if you look at, and I'll show you one more thing which will be very interesting. So if I take the percentage of GDP, because that is going to give us the actual percent of GDP, means actual expenditure on percentage of GDP, you will see that our fiscal deficit was 9.19% of GDP, right? So this is the number, 9.19%, right? And now this has gone down to 6.72% in FY22, and then it further went down to 6.43% in FY2023, and now in the end of FY24 the number is 5.6%. So this is very, very, I think the government, we should give credit to the government that they are able to bring down the fiscal deficit significantly. That kind of gives us the strength of India's economy. And mind you, only one thing that is responsible, that the government has been able to curtail its revenue expenditure. This is very, very important, because if you look at the revenue expenditure, you will see that it was 15.56% in FY21 Q4. Right? Look at this number, 15.56% of the GDP, and then 13.57%, then 12.81%, then 11.83%. See that how the revenue expenditure as a percentage of GDP is going down, and capital expenditure on a percentage of GDP is now increasing, but it is not very significant because the number is very, very less. So it is 2.14, then 2.51, then 2.73, and then 3.21. So though it doesn't look a very significant component of the GDP and the percent of GDP, but it is steadily increasing, which is very interesting and important. Now let's go. One more important thing is, which I forgot in this video, is the interest payment. Look at this interest payment. Interest payment is a very, very, I think bad for the economy and the government, because this is a useless expenditure. All the funding that you are doing of your fiscal deficit, you are taking loans, and in that loan you have to pay interest, and this is where the problem is, because the current interest payments is 3.6% of the GDP in the last financial year, which ended in 31st March 2024, which is an increase from 3.45%, and it is steadily increasing, though it went down a little bit in FY22, but it has now gone up again to 3.6%. So this is the problem that I see as far as the government's overall summary is concerned. So I hope that you probably understood it. Now let's do a little bit of deep dive on the summary. So let's look at the total tax revenue collection, because the total tax revenue collection is a very important metric to look at. Now if you look at this is basically again a monthly number. Now in the monthly number, you will see the corporation tax numbers have been increasing, but it has not increased significantly compared to what we basically have seen in GST, goods and services. So let's do a following. Let's not take the monthly. Again, let me do a quarter level, because quarter level gives us a very good view, because by looking at the quarter level, we are able to get a view as to what happened in the earlier financial year. Now, if you look at corporation tax in FY22, end of Q4 was 7.12 lakh crores. It increased to 8.26 lakh crores in the earlier financial year, which ended in FY23. Now FY24, it is 9.11 lakh crores. Whereas income tax, if you see, so this is a very modest increase. It's not a very large increase, because the government has been giving a lot of rebates on corporation tax. Now income tax, if you see, it is 6.73 lakh crores. Then it increased substantially to 8.08 lakh crores, and then it went up further. It's almost like a 2 lakh crore increase to 10.11 lakh crores by end of FY24. And goods and service tax is also doing pretty well. 5.91 lakh crores, 7.19 lakh crores, 8.21 lakh crores, right? So overall, if you look at our overall net tax revenue, the net tax revenue has increased from 18.05 lakh crores to 20.97 lakh crores to 23.27 lakh crores, which is the number which I told you to focus on. This is the number. Where was the number? That number which I said that we should be focusing on, the 23 point. Just a minute. Yeah, it is percent of GDP. Let me just make it, because that's why I got confused. Just hold on for a minute. I'll change this to actual, and if I make it to actual, you see this is the number I was talking about, 23.24 lakh crores. So this number, which I showed you here in this chart, right? In this chart, this is the number, 23.27 lakh crores. I think what happened, just a minute, let me have a look. 27 point, yeah, this is the same, 27.20, yeah, I think, let me just look at the number again. 23.27 lakh crores, where is 23.27? This should be 23.27. I think it is a rounding problem, right? So it is almost same, 23.24 or 27.27, maybe a little bit of a rounding problem. Oh, it's a budgetary estimate. Oh, no. It's a budgetary estimate number. The actual number is same. sorry. It's all accurate, right? 23.27 lakh crores, right? 27.2. This is the number which I showed you. This exactly matches with this number. 23.27 lakh crores exactly matches, right? So you see that how we are doing as far as our revenue collections are concerned. So one of the things why this gross revenue thing which you see here, which is pretty high, does not give us the full picture because of this line item, which is assignment to states. Because if the assignment to state numbers have to be netted out in order to get the net tax revenue, which is the central government's share. So that's why this final number, this is important, and you have to subtract the assignment to state from the gross revenue numbers. So this number is the gross revenue numbers. From there, assignment of state has to be taken into consideration in order to calculate the overall numbers. Now let's look at non-tax revenue, because non-tax revenue is a very important line item. So interest received have increased. Let me again do the quarterly time scale, because that gives a very good picture. Quarterly time scale, and in quarterly time scale you will see that the it's like a step function, right? You go here and then go down and go, because the cumulative sum. So it increased from 20.2 to, it is not a big number. Interest received is not a big number, so we can safely ignore that number. So what is important, what is significant, it is the dividend and profit. So this dividend profit was 1.61 lakh crores in FY22, 1.61 lakh crores in FY22, end of FY22. Then it went down because the RBI reduced its dividend to 1 lakh crores, and then it went up to 1.7 lakh crores, and this is going to go further. And let me show you how much it is going to go, and this is going to be given by the budgetary estimate. So let's do this. Let me take this forward. And let me do not actual, I will do budgetary estimate. So if I do budgetary estimate and then I do month, because quarter is not going to give us a great picture, and budgetary estimate lakh. So you see here the budgetary estimate as far as dividend and not month. Let me it's not showing up, the number is not showing up because I don't have this number, right? Okay, no problem. So let's leave that aside and let's go with the actual number. So we have seen that. So definitely, if you look into this number is going to be much higher, this fiscal year. Because of this number, the government of India is going to have a higher non-tax revenue prediction. I think probably I have this. Let me just look at this sheet. And let me do this, do the month time scale, and then if I do budgetary estimate in rupees lakh, and then I do and then stretches forward, and then you see that non-tax revenue, see 4 lakh crores. 4 lakh crores versus what? Let me do a quarterly time scale that will give us a good budgetary estimate. Let me do financial year, which is very important to see. So you see here how these numbers have been fluctuating. So this number was, so why I'm showing this number, because the non-tax revenue is very important because it is quite volatile because of the RBI dividend. So here it was 2.36 lakh crores, and it steadily increased, that it went down, then it basically became 3.14 lakh crores, and then there is a estimate of 4 lakh. I think this number is going to go up further when they make the revision going forward, and that's going to help the government significantly on their making sure that they are able to maintain their goals, objective budgetary goals. So this is regarding the dividend and profits. Then we have the services net. Now this is important. The services net important because of which one? The economic services net. The economic services net has the telecom revenues, right? The license fees, etc. So we have 1.52 lakh crores, right? Which we have increased from 1.12 lakh crores in the past in FY23, and then in FY22 it is 1.34 lakh crores. Now this economic services net number is little misleading. I'll tell you why. Because it consists of lot of notional BSNL's revenue, So actually this number is not that significant. So in a separate video, I'm going to explain to you why this number is not a real number. This is actually a notional revenue which the government of India is able to generate because of the capital investment which they are doing in BSNL. In return, they are getting equity. So you will see that the BSNL license fee, actual license fee that BSNL is paying is minuscule if you go to their account statement, the yearly account statement or the quarterly account statement. But if you go to the DOT website, you will find that the last year the DOT has collected a huge amount of license fee from BSNL, which kind of gets accumulated in this number, and therefore this number appears to be very, very high. So this number is subdued number. So therefore whatever you see as far as non-tax revenue is actually not the non-tax revenue number. It is quite low. 4.02 is not the actual number. It is quite lower than that because of the reason I told you, right? Now let's go into the details of the expenditure. Now this is important. This is going to be very, very important to look at. So what I'm going to do, let me just show you first the overall number, including all the line items. So I'm going to do all. Once I do all here, let me just show you all. Just a minute. Yeah, because there is a phase lag. Now you see here, as far when I do all, which means both the expenditure, the capital expenditure and the revenue expenditure. Now why this number is important? Let me just reconcile the number for you. This number is what? This number is 44.40 lakh crores. And let's go to the main sheet and let's look at the number. Again, let me bring out the actual numbers and let's see what the expenditure has been. Let me go to here and then I'll choose a month, and then so look at the 44.40 lakh crores, right? Look at this number, 44.40 lakh crores. Here's the number 44.43 lakh crores. Now let's go here and let's look at this number, 44.43 lakh crores. See this number, right? And this is the breakup of this number because this total number from revenue and capital expenditure. So biggest number is interest payment, and that's why I'm basically saying interest payment is the biggest concern. And that is the reason what I believe is that as the new government get formed, because of this number is rising, because of the amount of expenditure the government is making on capex, they are going to be under huge pressure because they have to keep the fiscal deficit down. So I really don't know how much appetite the new government will have in order to continue to make expenditure on capex, because they have to reduce their revenue expenditure. All the freebies that they are talking about, this payment, that payment, and free, Anaj schemes and other things which the government of India is giving, is putting a lot of pressure on this number, 44.40 lakh crores. So you need to understand that this is a substantial percentage of this number, 10.64 lakh crores, because this number is a sacrosanct number. This is where the income and expenditure, this is a total of income, expenditure plus income plus fiscal deficit is equal to the total expenditure, right? Which is 44.40 lakh crores. So imagine that 44.40 lakh crores, the interest payment is 10.64 lakh crores. Can you imagine that? How much interest payment that we have to make, and therefore we can't take any more loans. That's the problem. Then what are the other items? The defense is 2.9 lakh crores. Let's do a quarter level, because that is going to give us a very good idea as to what we have done in past, right, as far as the expenses are concerned. So if you look at what we did, so our interest payment, as I told you, has been steadily increasing. It is 6.82 lakh crores, then it becomes 8.05 lakh crores, and then 9.28 lakh crores. See, it's steadily increasing. It's like a step function going up, like a rocket, right? Defense revenues have increased. They have not increased substantially. There isn't, because you have to take care of inflation, right? So it has increased not very substantially, because within a period of 4 financial year, you have increased from 2.06 lakh crores to 2.9 lakh crores, right? Then transfer to state, you can leave it at roads and highways. So let me do this following. Let me just do revenue and capital expenditure separately. That will make a lot of sense. So let's do capital expenditure first, because that capital expenditure is going to give us an insight as to what is going on as well. So look at this. I told you in the capital expenditure, It started from 4.25 lakh crores, that it increased to 5.93 lakh crores, then 7.36 lakh crores, then 9.49 lakh crores this fiscal year. And where we are investing? Roads and highways. See this number, 0.87 lakh crores. Then Q4 is 1.38 lakh crores, then 2.09. So this year we did 2.64 lakh crores. Then we have railways. See how much we are investing in railways, and as far as capex is concerned. Then we have capital outflow defense services, though it's not very substantial, but railways and highways are substantial. Then we have DO, and this is notional. This is actually notional because this is BSNL, and lot of thing is spectrum here. And because it is spectrum, there is no capital expenditure here. This is just bookkeeping. Okay, so you need to understand that this item actually kind of it distorts the overall figure, this figure, because of this item, the DOT item, which is not productive, because a lot of thing is spectrum, which is inflatedly valued, right? Then we have, so these three items, actually these are two items, one item, second item, and maybe the capital to defense services. Rest of the items are minuscule. So it's very clear, though we are making investment, this is not a huge investment that we are talking about, because the rest of the capital expenditure items are not very, very large. Now let's look at the other item, which is the revenue expenditure. Now I'll remove capital expenditure and I'll put revenue expenditure, because there we will be able to see where we are making all the expenses. So as I told you earlier, the interest payment 6.82 lakh crores, that increased to 8.05 lakh crores, then 9.28 lakh crores, then 10.64 lakh crores, significant increase, shooting up. Then defense services, which I already discussed. Then food. This is where the subsidy is. Now look where the government of India is saving. Why the revenue expenditure is going down? 5.54 lakh crores is going down. Look at this. This subsidy is going down. Though we are basically, the government of India is saying that, look, we are doing great subsidy and this, that, then. But, they are meticulously managing this, and this is going down to now 2.11 lakh crores. Fertilizer subsidy, it increased, and then they have been able to bring down the fertilizer subsidies. Rural development, not much spent. See, not much spent. 1.96 lakh crores, and then 1 lakh crores, 1.6 lakh crores, and then 1.77 lakh crores, then 1.62 lakh crores. Then there is one item, revenue expenditure, not defense pension. So now you understand why government of India is able to spend so less, why the revenue expenditure numbers have been going down. Look, this is what I told you. Let me just take a quarterly time scale. Why this number is going down? And this is where they are basically able to save money, right? This number is being driven out. Why? Because of this reason. There is a less spend on food and public distribution. There is a less spend on fertilizer, right? Less spend on rural development, right? So these are the things, these are the big ticket items, because if you look at this big ticket items, these are the big ticket items. Now then we have agriculture and farmer welfare. Look, it was 1.08 lakh crores in FY21. Same number, 1.08 lakh crores in FY. So we are not spending huge amount of money on some of the welfare schemes which are supposed to be spent. Let's do one more thing here. Let me go to other pages. Let's go to rank number 11 to 12. Then you will see where the money is getting spent and where we are basically able to save money. Look at higher education. Higher education number has increased from 0.32 lakh crores to only 0.55 lakh crores. There is hardly any increase, right? Housing and urban affairs, yes, it increased, but it is going down. Look at this. And then pension, it has not substantially increased, you see. And then we have the DOT thing, which I told you, in external affairs. Then let me go to the next chart, next rank number 21 to 30. Then let's see whether any other items of substantial to look into. There are not much. So these are all very less items. So now you understand where the government is doing a lot of saving as far as revenue expenditure is concerned. So this is the net. So I hope that you probably understood. I don't have anything further to add, because it's already 30 minutes getting past, because a lot of time has been spent. Now this is where the story of India's accounts are concerned, India is spending on capital expenditure, but in order to contain the fiscal deficit, they are keeping the revenue expenditure flat. Now, how long they will be able to keep the revenue expenditure flat, we don't know, because what kind of government structure is going to come, what kind of political compulsion will come, we don't know. Therefore, the capital expenditure is at risk. They can't. It may not be possible for the government of India to spend on capital expenditure, because if they continue to spend on capital expenditure and also increase the revenue expenditure, the fiscal deficit is going to go haywire. And our interest obligation is going to increase, which I already told you. Because look at this, the interest obligation from 6.82 lakh crores have increased already to 10.18 or 10.64 lakh crores. So there is a huge risk. This is not an easy game which is going on. So unless you have this bigger picture, which I explained to you right now in this video, it is very difficult to understand what is going on. All the narrative that is getting spoken. I'm not basically questioning anybody's intention, by the way. This is not the purpose of this video. I am giving you hard numbers, and you can look at this number and decide for yourself where the risks are and what kind of narrative that can play out in the market, given the fiscal situation that we have and given our international rating has to bound to increase, because India is going to be listing their bond in the international market for the first time. And then we cannot play around with it, because the default risk of India is going to be measured by the spread of the bond, and we will be evaluated on a daily basis. What is our fiscal situation? We can't hide under the carpet anymore or anywhere else. I hope that you probably understand what the situation is, and I think you have probably learned something from this video. I have learned a lot as I went in aggregating this data, and I'll keep doing so, and I'll keep bringing this video to the audience, and let me know if you have your feedback or anything else you want to learn or understand. Whatever is my capability, I'm not an expert, by the way. I'm only learning in the process as I going through this whole process. So I'll try to bring that topic before you. Thank you very much for your time.